Hello, good afternoon, everyone. My name is Sidon Ledesma, and I'm a vocational rehabilitation counselor from the Western Wayne District's Taylor office. And I'd like to welcome everyone to this first Friday presentation on this beautiful sunny March day. Today, we'll be discussing financial literacy and how MRS can play a part in providing the resources and support towards financial literacy. Joining me today is my colleague Glenn Cross, and along with our special guest speaker, David Watkins.
Hello, everyone, and thank you for joining us. My name is Glenn Cross. I'm a vocational counselor with the Monroe MRS office. During the presentation, please keep in mind the following rules of etiquette. In the event of technical difficulties, please be patient. The chat feature is available to answer questions or ask questions and comments throughout the training, and time is reserved at the end of the presentation to answer questions. If time does not allow for all questions and comments to be addressed, please utilize the presenter contact information located in the chat screen to email unanswered questions. Next screen, closed captioning is available by selecting the CC closed caption button and select show subtitle. For technical assistance, please utilize the Zoom Help Center. Never done that, but if you do, hopefully it's helpful. Next screen.
At Michigan Rehabilitation Services, our mission is to develop customized workforce solutions for businesses and individuals with disabilities. And our vision is a diverse and inclusive workforce that unites businesses and individuals with disabilities towards a common good. One of the many ways MRS strives to meet our mission and vision is through providing our customers with information and resources for financial literacy and the opportunity for them to make informed choices towards their employment goal.
Financial literacy is the ability to understand and utilize available resources to manage one's own money and achieve financial stability. The mechanics of personal finance is not all that difficult. Most people have had some experience developing and implementing a budget. The psychological side of money is what makes managing personal finances hard. I would be willing to bet that over my lifetime, I've created at least 100 personal finance budgets. Financial literacy is a lifelong journey for which practice makes perfect. Really? If that's the case, I should be the rock star of personal finance. But practice really does not make perfect. Some researchers suggest that when it comes to personal finance, practice alone only accounts for 10% of performance. Personal finance is 10% head knowledge and 90% behavior. Retailers understand this more than anyone. Consciously or unconsciously, more purchases are made strictly on an emotional level. Common emotional charging points are feelings of guilt, shame, anger, or seeking a sense of euphoria or satisfaction from purchases, or saving money. Buy three, get one free. Well, who can pass up the get one free? But, really that's just bait. Do we really need three? If we really need three, that's a great purchase. If it's not a need, then what that chalks up to be is the retailers being very successful in getting us to spend more of our money. Having money in the bank feels good. Being able to save money on a purchase feels good. Having money to share with our relatives and friends feels good. No wonder so many people have, including myself, have challenges in this area. During today's presentation, you will be provided with an overview on the importance of financial literacy as a key component to career exploration and job satisfaction. You will also hear from professionals on strategies to improve your financial health. Next slide. I believe we can all relate to the images in this slide: burning through our cash reserves or being hit with unexpected bank fees. Let's face it, no one would purposely flush money down the drain. But if we're all honest with ourselves, most of us have done so. How do you act, think, and feel around money? Effective money management is difficult to achieve without understanding one's own perceptions and tendencies around money. To make things even more difficult, we are being bombarded with new ways to spend money. Magically, your cell phone or your smartwatch can Venmo your neighbor $30. Stores allow you to use your credit card without even touching the card reader or signing your name. Spending money is becoming increasingly more detached from the physical dollar. Retailers understand this more than anyone. Some stores have taken the extreme step of disallowing paying with cash. The obvious benefit to the retailer is that you as the consumer are likely to spend more than you would if paying by cash. Don't get me wrong, using credit wisely is an important aspect of financial literacy. It can be an excellent tool to build credit. Next slide. The problem is few of us understand the power of emotional spending. For those who struggle in this area, using credit can often lead to a mountain debt. Next slide.
And according to the National Disability Institute, many persons with disabilities experience many different financial stressors that have an adverse effect on their daily lives. For example, as adults ages 18 to 64, only 1 in 3 persons with severe disabilities are employed. People with disabilities are twice as likely to have an annual income of less than $35,000. Individuals with lower income have a higher rate of skipped medical treatments. People with disabilities are 3 times likely to have extreme difficulty paying their bills. 55% of people with disabilities reported they could not come up with or maintain $2,000 for an emergency fund, compared to 22% of those without a disability. Compared to people without disabilities, those with disabilities are more likely to be late on mortgage payments, overdrawn on their checking accounts, or taking loans from retirement accounts.
Through a vocational needs assessment, your MRS counselor can help you identify a path to improving your financial bottom line. This can include a referral to one or more of our community partners that specialize in working with individuals with limited financial resources. Programs such as Bridges Out of Poverty provide real-world lessons to improve financial literacy and to reduce monthly expenditures by accessing resources for food, utility assistance, housing, and healthcare. Next slide. Let's face it, practicing good financial management is not easy. With enough practice, managing your finances can become easier. Search the internet, talk to a friend or financial advisor. Pick 1 or 2 things to start with. A few suggestions that could be helpful are automate and keep close tabs of your savings account. Deposit a portion of your check in a bank that would be difficult to access. How many of us, when was the last time you actually went to a bank? Going to a bank now is kind of like a foreign thing. So that might delay your purchases and going to your savings account. Reward yourself with 10% of your savings each year. So when you're saving your money, you want to be able to use some of it. And if you amass something, let's say $1,000 over a period of time, 10% of that you can just splurge with. Regularly explore opportunities to improve work skills, to qualify for a higher paying job. Work with your counselor to look at options for career advancement. Seek employers that match 401k contributions. That's something that you can talk with your counselor also about, depending on what your financial needs are. Commute to work with a coworker. If feasible, utilize public transportation to save on car payments, insurance, and repairs. Owning a car is one of the more expensive things that we have in our lives. So any way that you can reduce that would be a benefit. Consider a roommate to share financial burdens. Avoid paying interest on a purchase that can be obtained through scheduled savings. I like this one. I use this one quite often. Delay unplanned purchases for 7 days. I've actually gone to stores several times to look at what I want to purchase, to make sure I want to purchase it before I do. Never shop when feeling emotionally dysregulated. If you're feeling sad, the tendency is to buy more to feel good. And my wife tells me this all the time. she won't let me go to the grocery store when I'm hungry because she'll end up buying more. With enough practice, we can all be as good as this little guy. Next slide.
At MRS, your MRS counselor can work with you to identify a viable employment path that can put you on a path towards financial stability. Employment paths are determined based on factors such as customers' capabilities, abilities, strengths, and interests. MRS, in partnership with our qualified vendors, can provide career exploration as well as guidance for labor market information that identifies viable employment opportunities that could meet your financial goals. Some examples of career exploration include vocational assessments, career scope, ONET, and these things link your strengths, abilities, capabilities, and interests to potential employment opportunities that can meet your financial goals. Once a viable employment opportunity is identified, MRS, in partnership with our qualified vendor partners, can also provide job development and placement assistance taking into consideration a customer's financial goals.
For customers who receive Social Security disability income or other government benefits, MRS can refer you to benefits planning. Benefits planning will provide you with a written report detailing how earned income will impact your benefits. Example of outcomes of benefit planning can include improved understanding of various work incentives and how they can be used to increase your available income, increase knowledge of the Medicaid benefits and how you can retain them once you're employed. Next slide. To learn more about our services, and there are a lot of services that we offer, and any other helpful information, you can access the provided links in the chat area. Are there any questions that our participants would like to ask of us at this time? I can't see the chat area. Can you?
I do see one question that says customers are having a hard time logging on. We evidently still have people logging on.
Oh. All right, so that is the end of our presentation. Marie,
there is one question. I see one question. It's Angela states, what do these services offer? I guess she's speaking about MRS.
Are you speaking in terms of financial literacy, or in terms of assisting people with economic resources? It can really range from a number of different things. We can help customers look at employment opportunities that would allow them to meet their financial needs. We can connect them to community resources so that they can access assistance with utility assistance, maybe low-income housing or income-based housing, any number of different things. Every individual need is really looked at specifically for that person, dissected, and then trying to figure out what resources we can connect them to. My personal feeling is that MRS has the unique ability to really run the gamut in terms of what we can provide, but it's hard to say just in a global perspective because it's really based on the individual need. I don't know if that answers that question, but Sedona, if you would like to chime in and maybe add a little bit more to it.
Yeah, as you mentioned, we offer services in terms of what Glenn said on an individual basis to help whatever financial situation you might be in. As I mentioned, we're geared for employment outcomes, which also is going to be geared to hopefully helping your financial situation and financial goals. And I did see another question from what are some common or easy mistakes to make when managing your money? And I think David is going to really hit hard on this topic when it's time for him to present here in a few seconds. So I think he's going to address a lot of that.
Any other questions? Well, thank you, everyone. I'm looking forward to hearing our next presenter, Mr. Watkins.
Hello, everyone.
Okay.
I'm sorry.
David, I'm going to introduce you.
I was about to dive right in.
Okay.
Thanks, Marie.
No problem. So good afternoon, everyone. Thank you all for joining us today. I have the honor to introduce our guest speaker, Mr. David Watkins, Community Development Officer at Level One Bank. Mr. Watkins has over 40 years of banking experience, and he has distributed millions in grant funding to first-time home buyers. Mr. Watkins has received numerous honors, accolades, and awards, just to name a few. Michigan Community Spirit Award recipient in 2019, Level One Bank Core Value Award recipient category Do What's Best in 2018, Community Hero Award in 2015, and Core Value Award winner for Passion in 2014. Mr. Watkins has also been a board member of the National Association of African Americans in Human Resources since 2015. Mr. Watkins, thank you for affording us your time today. We are privileged and honored to have you with us. Take it over.
I appreciate that. Thank you for that intro, Maria. I really appreciate that. Thanks, everybody, for having me. It's been a long day. Just, to kind of briefly, personally, I had experienced a death in the family, but it's more like a celebration as my uncle of 97 years passed away, and we had his services today. So God bless the Hale family, and I'm super supportive, and it's and the reason why I mention this is because my cousin for the last maybe remaining I want to say year of his life cared for him in his home with his wife. So it took a considerable amount of his own resources that made that possible. And the way you make that possible is by saving, is by managing your money, managing credit, and so you never know. I mean, I know that the other speaker, Glenn, had mentioned about a rainy day fund. I think I heard that. He also mentioned about seniors with disabilities and the annual income that they make. And how to manage $35,000, that kind of thing. So we're going to get into this presentation. I won't hold you up too long. I won't take too much more of your time. Next slide, please. So in this course, we're going to learn, and these are bullets, so you can just go ahead and pop them up. We're going to learn about credit, why it's important, the 4 C's of credit, okay, and credit reports, how they're being used, how to request a credit report if you don't know how, good and bad credit scores, how to build credit, and how to repair credit. So, we're going to talk about a lot of different things, and I'm probably going to try to relate to you all based on some personal experience, because as many of you all have had a lot of different experience with credit, right? So, just hang in there. We're gonna see how this plays out today. It's gonna be a good presentation. Next slide. Okay, some reminders. Credit is borrowed money. It must be repaid. Obviously, you know that. Having good credit makes it easier to borrow money. It can be useful in emergencies. We talked about rainy day funds. Allows you to make large purchases or big ticket item purchases. So we're talking about houses, cars. They may be, you might have some huge medical expenses. So there's a lot of different ways that you can leverage credit to help take care of this, because a lot of people, I know some people that refuse to open credit accounts because, they want to pay for cash for everything. But, you're going to be confronted at some point with having to use credit at some point in your life. So I'm going to try and shed some light on how to be a good steward of credit. Okay, next slide. The 4 C's of credit as it relates to lending institutions like Level One Bank, for example, right? So you want to understand that every credit contact carries a certain amount of risk that the borrower may not be responsible. Okay, so when you apply for credit, 4 primary considerations affect the decision to approve or decline your loan application. Let's get into what they are. All right, capacity is the first one. So what is your ability to repay the loan? Do you have a job or another source of income? Have you held your job for a length of time? Do you have other debts? So in my situation, I have a business. I have a photography business that I've had been a professional photographer since 2005, and you know, so that has helped me to add more resources and increase my capacity to be able to extend a loan maybe a little bit further than I would have been just based on my 9-to-5 job. So, you know, and what length of time have I had that? Well, obviously I just mentioned 2005 has been considerable length of time. And I list this when I apply for, you know, different types of credit. And so, you know, the capacity, that's how much can you afford to repay the loan? How much is your ability to repay a loan? Okay. Character is the second C. Okay. Will you repay the loan? Have you used credit before? Do you pay your bills on time? So the character of you, and you know, your reputation, right? Your reputation as to repaying loans back. So when they look at your credit report, when the underwriter or a person that's making a decision or an institution is making a decision on whether they want to extend you credit or not, they're going to look at your character. They're going to look at, have you been paying your bills on time? Have you gotten credit before? Do you have some accounts that, you know, have been open for a length of time? And you know, what's the frequency that you're paying them, you know, on time? So are you, do you have loans that's been in default? Do you have loans that, you know, that have been charged off? And we'll get into that kind of thing, but your character is, you know, your reputation in the credit world of paying loans back is what character points to. Okay. Collateral is the third C. If you fail to repay a loan, is there something of value you agree to forfeit? So when you collateralizing, so let me just use this example. So in the instance of a car loan, the car is the collateral. So they're going to hold the car. So, you know, if you don't pay the loan back, obviously you risk the car being repossessed. So, you know, a house, in other words, so if I have a mortgage on a house, the house is the collateral. You know, using that asset to guarantee that you repay the loan. Okay. Or if you know, something happens, if you fail to pay, then you know, they start forfeiture procedures. Okay. Collateral. Capital. Okay, so the capital is the accumulation. What are you worth? Do you have other assets such as savings accounts, cars, share certificates that you could use to repay the debt? How you handle credit transactions determine your creditworthiness in the future and will affect your access to credit and costs. So the capital that you have. So what have you, you know, acquired over the life of the, you know, the time you've been working? So do you have other assets that, you know, that you can, you know, use as part of your, what they consider to be an investment or a portfolio, right, of assets? So if you own other houses, if you have multiple cars, if you have CDs, certificates of deposit, now those are all part of, you know, the capital that you have and that you've accumulated over time, right? That is that could be used to pay a debt, you know, so we'll get into that later. So capacity, character, collateral, capital. Those are the 4 C's of credit. Next slide. So it's a quick survey. And I mean, you can kind of think about this since, you know, I usually do this presentation. It's usually a live presentation, but, you know, just ask yourself these questions. Do you know your credit score? And these are bullets. How many have seen the commercials for obtaining credit reports or credit scores? They always talk about freecreditreport.com. There's Credit Karma that's out there, next bullet. So you can just kind of, there you go. So, Have you requested a copy of your credit report in the past 6 months? And I will say this, that today, credit is a lot different than it was, back when I first started using credit, way back I'm gonna date myself, way back in the 80s, right? So, they didn't have like the Credit Karmas. You can only get one free credit report per year. That has really changed a lot now. So, the 3 credit bureaus, and we'll talk a little bit more about them in the presentation, Experian, Equifax, and TransUnion, they all have, ways where you can prepay like a small amount where you can, check your credit all year long. And they even send you an alert as to let you know when something has affected your credit score, whether it has went up or down. And so, today you have much better access to your credit report and your credit score than you did back, let's say 20 years ago, So yeah, these are questions you want to ask yourself. If you're not checking, you need to check, because you need to find out if there's been a compromise on your credit report, if somebody is using your credit that you don't know about, right? And you just need to be on top of this. And I'll tell you the reason why later in the presentation. Next slide. Okay, this is some other questions I want you to think about. What types of actions do you think affect your credit score? Okay, what do you do when you find something incorrect on your credit report? So these 2 questions are super important, okay? Because a lot of people, if you're not checking, you won't know what's wrong with it. You won't know if, there are some factors that's jumping off in your life that is making your credit score go up, down. You don't know if you're not checking, you won't know these things, right? So I'm going to try and shed some light on why you should be a better steward of checking to make sure you know it's affecting your scores if you're not doing it already. Okay, next slide. Here's some statistics. I want you to think about these stats. Okay, 1 in 8 Americans are unaware of the credit score, according to new research. This was as of 2019. The poll of 2,000 Americans discovered that 13% of those studied have literally no idea what their credit score is. As of 2013, the Consumer Federation of America conducted a national survey of over 1,000 adult Americans. Of those, they found out that 2 out of 5 didn't know that credit card issuers and mortgage lenders use credit scores in decisions about credit and interest, right? So, and that's huge. 2 out of 5. Poor credit scores can increase an interest rate on a loan, resulting in a higher total cost to the purchaser. So if you got bad credit, or if I'm not gonna say, I don't like using the word bad credit. If you have credit challenges, let's say that, okay, because it sounds better, right? So if you have credit challenges and you batting probably somewhere in the 4s or the 500s, then you're going to pay higher interest on anything that you try and purchase, if they even want to grant the loan at all. But I will say this, they will give you credit, because predatory lenders are looking for you, right? They call them predatory lenders. That these are the ones that will give you a car loan, even though you got credit that's batting in the 400s and the 500s. They give you a car loan yesterday. Okay, that's how fast they give it to you, because they know they can lock you into an interest rate that's going to be in the 20s. Right, it's going to be like minimum 22, somewhere between 22 and 29%, which is just outrageous. You're paying for the car 2-3 times, especially on a used vehicle, right? So 2 out of 5. 2 out of 5 also incorrectly believe that personal characteristics such as age, marital status are used in calculating credit scores. Okay, that's incorrect. Age and marital status, not important as it relates to calculating credit scores. It's not part of the equation. It has nothing to do with it. Okay, next slide. Here's a couple of other stats I want you to think about. Study concluded that one poll in conjunction with Lending Point examined credit score knowledge and lending habits of respondents. It uncovered 71% of those studied are totally unaware of various ramifications associated with a bad credit score, right? They didn't know. 74% say that low or bad credit scores prevent someone from their life. Excuse me, let me read that again. 74% say that a low or bad credit score prevents someone from the life they want to live. Okay, so look at it this way. If your credit is, again, batting in the low 4s, 5s, maybe even 6s, this is not going to allow you to close on the mortgage you want to close on, right? I know some people that's in Habitat for Humanity programs, and they're in these programs specifically for this reason, because they want to improve the quality of life, right? They want to improve their opportunities to maybe be able to purchase a home in the Southfields of the world, as opposed to, and I'm not, using, I don't want to talk about any particular neighborhood that's a bad neighborhood, because there's great living on the east side of Detroit. There's incredible living on the west side of Detroit. It just depends on your credit and income. But we also know we live in Detroit where there's some very challenged neighborhoods where there's only like 1 or 2 houses on the whole block. The rest of them's vacant. If you're not trying to move into a neighborhood that's at least 80% populated, then you're gonna have challenges, because every time you try to move something in that house, you're gonna have people looking at you because you're standing out like a sore thumb, right? I know there's blocks in Detroit and some of the surrounding communities that only have 3 houses on the whole block, right? 3 houses on the whole block. Is that something, do you want to have that particular choice to move in that particular type of neighborhood? I think that kind of points to the quality of life that you really want to try and have for yourself. You want to try and be in a neighborhood that's at least 80% populated, where people are in these homes. And see, because I grew up in a community like that. I grew up in Highland Park back when Highland Park was thriving, right? I'm original HP all the way. Back when Highland Park was thriving, we had, high school, college. We had, 3, 4 middle schools, 3, 4 elementary schools in that small city. And every block had families on the block. It was more than 80% populated. And these were, thriving neighborhoods. So, I'm just using that as an example. I'm saying, this points to the quality of life when you start looking at this. All has to do with bad credit and the choices that you have, right? So if I got better credit, if I start working on my credit now to improve the kind of choices I want when it comes time for me to be able to choose where I want to live. Okay. I know that I'm working with an interpreter. I hope I'm not going too fast for the interpreter. And she's working it out too. Somebody give her some water, y'all. Even though she's not speaking, give her the water anyway. She's working it out. I love it. Turns out that 44% didn't know that higher interest rate, the higher rates and more restrictive terms on any approved loans can accompany a poor credit score, right? And 54% go on to say that low credit scores can make getting approved for a loan difficult, while 48% reveal a low credit score can cause them trouble getting job or security clearance. Let's talk about that for a minute. I work in the bank world, right? The first thing that they're going to do is look at your credit score. If you're trying to apply for a job in the financial world, and I'll give you a couple of reasons why. The first reason why, and I found this out early in my career, they want to make sure you're not at risk for embezzlement. Okay? Because they know that, people that work for banks, a lot of times, it just depends if you work around money, if you don't work around money, if you work around accounts, credit, that kind of thing. There's opportunities for you to compromise, right? There's opportunities for a person to do something that's illegitimate. Okay. A lot of times that points to your financial situation. Not all the time, but it does. It can. You got, folks that work in the financial world that gamble. Okay. And they want to make sure you're not at risk for embezzlement. When they look at your credit score, all those factors go into it, right? They may not come right out and say it, but a lot of this goes into why. And then another thing is you represent, you're trying to educate people on how to be a better steward of their financial situation. How can you go on to do that if your own situation is not good? You ain't cleaning up your own backyard. How you going to tell somebody else how to mow their grass? Okay.
Excuse me, David, would you like to
Yeah.
answer questions real time still?
Yeah, uh-huh.
We do have a question. So we have a question. What are some instances where you can only pay with credit, not including not including anything that can easily paid with credit, but anything that can only be paid with credit?
I'm sorry, say it again.
Okay.
Well, I want to pull up the chat myself. I'm gonna
Okay.
read it. Okay, so
It's in the answer. It
Answer?
moved from
Okay.
open to answer at the last one. What are
The
some
last one?
instances?
Okay,
Uh-huh.
I got it. So what are some
Okay.
instances where you can only pay with credit, not including anything that can be easily paid with credit, but anything that can only be paid with credit? You know, I put it like this. Apply for American Express, and there's nothing you can't buy with credit. Okay, American Express has, well, see, now they have different cards, but if you get American Express, the green card, well, you can go in and buy a car off of credit, right? But when it comes time to pay that bill, they want all their money back, okay, on the green card. Now, they have other cards that can be used, and you can, like, say, for instance, if I want to make a big ticket item purchase with credit, they have a credit card that you can use, and I can put it on a payment plan. Like I'm just kind of giving you kind of like an easier way of understanding. So there's a card, I forget the name of the card, what it's called, but you know, you don't have to pay it all back at one time. I can spread out. I can have it, the payments, the amount of what I just charged spread out over a period of time, over, you know, maybe 12 months or 6 months. You got the option of doing it either way. I kind of like that option, you know, because sometimes it may fit. I mean, I'll give you an example. I have a photography business, and you know, my business, I have insurance on my business. Say, for instance, I break a camera and I got a gig the next day. I can use my American Express card, make the purchase for a brand new camera, right? And I don't have to pay it back the next month. I can spread those payments out over 12 months. So, you know, there's different types of or different credit vendors, I want to say, that have different types of accounts that you can use where you can only use credit. You know, I mean, and I put it this way, and I hope that that answers your question. I'm gonna go back. Let me kind of look and make sure that I answered it correctly. I think I did. You can only pay for that. You can only use credit to pay. I mean, and that's pretty much, Evan. That's pretty much in most situations. Okay, most situations have an option for credit unless you know you're doing something. And I put it like this. I see this all the time, even when I go to when I'm at festivals. Well, now, you know, we haven't had a festival in a long time, but when you're at public events, because now they got card swipes. You know, now you can use credit where they're carrying the device with them. Like if I'm at a pop-up shop, a lot of times, you know, I don't even have to be in a traditional store or traditional shopping mall or something like that. You can be like on the street, and if you see a vendor on the street and they have some merchandise or maybe food that you know that you want to purchase or they're selling, they got a card swipe right there for you, and they'll take it. Okay, so you know, I hope that answers your question. Let's kind of move into, let me see if I see anything else in the chat. No. Thanks, Glenn, for pointing that out. There's a couple things out there that he pointed out for Evan. Okay, next slide. So yeah, let's get these bullets up. Everybody good? Is everybody good? If you have any questions, pop them into the chat and we'll try and get them answered. Okay, credit reports. A record of how you paid debts, how much debt you have, whether you've made payments on time. It'll show 30, 60, 90-day delinquencies, collections. All of this is on the credit report, right? Any negative information about you, that's public record, will 9 times out of 10 show up on that credit report. Okay, any kinds of collections, any types of garnishments that you've had, it will show up on your credit report and affect the credit score. Unpaid bills that are not resolved may turn into public records through judgments, bankruptcies. So if you're not paying DTE on time, that could turn into a judgment if you got a big balance. But a lot of times they can, see, that only happens when you start trying to ghost them. Don't ghost them, right? Call them, make arrangements. You know, you got options. A lot of people run away from unpaid bills like they don't have any options. Don't do that. You know, call them, make payment arrangements. When you start seeing them, they blowing up your phone, answer. You know, answer the phone. Let them know, you know, that, you know, I guess you're having some challenges right now, and that, you know, you unable to maybe pay all of it, that, you know, maybe we can work some type of arrangement out. Believe me, some money is better than no money to these creditors, okay? And they'll harass you, make you feel uncomfortable, but believe me, they will take some money from you. Okay, next slide. All right, credit report use. Information in your credit report may determine get a loan or other form of credit. It'll determine, the information in your credit report may determine you getting a job, may be able to rent or buy an apartment, get insurance. Let's go to be able to rent or buy an apartment, okay? Because a lot of people don't think, you know, a lot of times it just depends on who the person is that's the landlord, but I'll guarantee you, in Oakland County, 9 times out of 10, they may or may not, they may pull your credit report, okay? Because they want to know if you got length on the job, if you got, you know, how's that being reported? Do you have, are you making the kind of money that you need? I mean, a lot of times some of that information is going to pop up on your credit report. And they use this to find out if you have the ability to pay them back, if you be able to pay the rent, the monthly rent, right? So all this information will be on your credit report. Excuse me, it takes this water. Anytime they want to extend you a loan, they're gonna pull it. They got 2 different kinds of inquiries. They got a hard inquiry and a soft inquiry. We'll talk about that a little bit more in the presentation. Okay, get insurance. This is different because here's the deal. They look at your insurance if you, most of the times, well, I put it like this, they'll base giving you an insurance policy based on credit if you haven't had a previous policy before. So I put it like this. So there was a time when I was buying new cars, right? I was buying new cars. I was in leases, so I was getting out of one lease, getting into another lease, and after every 2 years. So there was a period of time where I stopped leasing and I started buying used vehicles, right? So there was a period of time where I didn't have to buy, you know, I mean, you know, I didn't necessarily have to finance a car. I was just paying cash. So, you know, and then there was a period of time where I let my policy lapse. This was probably back in the 90s, I want to say, where I let my insurance lapse and I didn't keep full coverage on it because it was a used vehicle. I get no fault. You know, I didn't have a previous insurance policy that was a policy of something that they could base a newer policy on when it was time for me to buy another new vehicle. So long story short, it was kind of like they ran my credit to make sure I had the ability to be able to afford full coverage on the car. Yep. So there's instances where, you know, they may have to pull credit to find out if you can afford a full policy. Yep, full coverage insurance policy. Okay. Your application can be denied, may be denied if you have previous credit problems. Obviously, you know that. Okay. Next slide. Okay, it's your responsibility to that your credit report is accurate. So it's your responsibility to check it. Remember, I said check it, recheck it. So there's with Experian, I put it like this. So I have an account relationship with Experian, okay, which is the middle score. That's the one that is always seems like that's the one that they always base credit on, is the middle score. And at Experian, I think I paid like maybe $7 at the time, and I'm in like an account. I have an account with them where they send me alerts every day. I talked about this earlier in the presentation, where they send me accounts anytime something happens to my credit. They send me an alert. Now Credit Karma will do it, and Credit Karma is good, but Credit Karma is not always accurate, right? Credit Karma sometimes it could be 10, 12 points in either direction off. Most of the time it's inflated about 10 points higher, or it could be more in some instances where you know, it's more than what your credit score actually is. But Experian will be spot on. And Experian will let me know if there's the slightest change in my score. I give an example. There was a time where I have a couple different lines of credit, but I have one line of credit, small. It's only like about $500, and it's overdraft protection for a checking account that I have at a credit union I belong to. And so what happened was I had something that came up and I had to spend like most of that 500. I had to go over 30%. And I'll explain why this is important to stay under 30% that you're using when you're using the total amount of your limit, right? I had to go over that 30%. I had to use almost like $400. Never mind that I was paying it right back when I got paid. I was putting the money right back and paying the line of credit off. But it got reported within 30 days before I was able to pay it, before it was time for me to pay it back, rather. So in other words, that reduced my payment. It reduced my credit score. I took a 20-point hit just because I went on a $500 limit. I think I used like maybe $350, almost $400 because I had to write a check and I had to use it. And that hit my credit score 20 points low. So I went from, I was up there. I was hanging in there. I was at about a 760, and it's dropped me down to a 740 from having really good credit to having just good credit, and that may make a difference in the interest, in your interest rate if you're trying to buy a car, trying to buy a house, whatever you're trying to do. That could be significant. A few points here and there in either direction could cost you a couple $100. And we're talking about monthly, right? So next slide. Check it. Credit scores. They help lenders determine the risk, your risk level. Why should I extend your credit? What's your ability to pay it back? That's the risk. Based on the information in your credit report, your credit score will, payment history is the largest percentage, your payment history. You paying it back over a period of time is the largest percentage. We'll talk about the percentages. A score that one lender considers satisfactory may be unsatisfactory to other lenders. So it depends on the underwriting. So, that's why it's good to just have, try and have the best credit that you can have, because multiple lenders, they look at credit different ways. And I'll give you an example. At Level One Bank, we use what's called non-traditional credit when we make credit decisions. And what I mean when I say non-traditional credit, okay, I'm not talking about the auto loans. I'm not talking about your installment loans. I'm not talking about your credit cards. I'm talking about non-traditional credit. We're talking about your DTE bills, the AT&T Uverse bill, right? That's non-traditional credit. Looking at how I'm making those payments, okay? Looking at, and a lot of people don't know this, but your rent can be, or you can use your rent payments. If you're making great rent payments, you can ask the leasing office to report your payments to the bureaus, to the 3 credit bureaus, so that you can be getting credit for the rent payments. See, a lot of people just think it's a mortgage, but no, you can have your rent payments included in the equation, right? If you're making great payment history, I've been in the same home that I've been in, going on almost 14 years. And I definitely want those payments, that great payment history. I want that payment history reported to the bureau. Okay. So, you got to be careful with that. Okay. Next slide. FICO score. I know you've heard this term thrown around. Okay. FICO scores. Primary methods that lenders use. This is how they calculate it. All right. Compares your credit to thousands of other customers just like you. Okay. Scores range from about 300 to 850. And here's some factors, okay, what breaks this up. There's another slide that kind of gives you a little bit more in detail of how this breaks down, okay? But you can take a look at where it has at the bottom, a 739, how that would be kind of fit into this equation. Scores in this average US ranges are considered good. But you see, when I used the example, when I had a 760 that dropped me down to 740, there was really not too much of a difference in this example. But if I went 1 point under that 40, I would have went from a dependent borrower to just a good borrower. Very dependent borrower to a good borrower. 1 point in the wrong direction can change all of that. From a 670 to a 669, you know, and that has major ramifications. Just that 1 point being on the edge like that, right? So you got to know, you got to check. And you got to know what's affecting your credit score, right? You got to know how to flip it. Because if I'm looking at my score and I see I'm batting down in the low sixes, but I see some things that I can change, right? I see some things that I can change. I see some and there's a couple moves that I can make. You know, if you got those student loans and they're in default, man, you better get them student loans in great shape, because that will that's being factored into the equation. And don't think that you have options. You know, I do a presentation on student loans and credit, which is, you know, very informative to let people know what choices that they have when they faced with paying them high loans back, you know, because you got options, right? Don't never let nobody tell you, don't never let anyone tell you that you don't have options out there when you got a loan in default, a student loan, or any kind of loan, but definitely a student loan, right? Because, you know, that could add if you get a loan out of default, that could put as much as 20 to 40 points back into your credit score, bring you from a low fives to back up into the sixes, and now you're on your way back to establishing, you know, better credit. Okay. Next slide. This is the slide that I like, that gives you a breakdown of how this is all going down, how it's all calculated, right? Okay, so this is how the scores broke down. 30% is the account amounts that you owe, right? 10% is the new credit that you've established, right? So you went out there and you got a couple new cars, that's 10%. The length of credit history, that is 15%. To me, this is a good one because it's constant. It's gonna always be there as long as you don't close that account out. You can, you know what, pay them down. If you got accounts, you know, 3-4 different credit accounts, 3-4 different credit cards, pay them down, but do not close the account out. Because once you close the account out, you shut off the history, right? And the history is you. That's you being on the grid. Okay, that's you being on the grid. I know some people that, you know, and they'll say this. You know, they got people that'll say it's better to have bad credit than to have no credit at all, because I can turn bad credit around. Okay, and at least they know I got a history that's out there. I've had credit before. I've experienced having credit before. All I need to do is have some different, what they consider to be trade lines. So if I got some credit with challenge, I said some challenge credits. I want to stop using bad credit. Credit challenges. Then I need to start a new history, right? I keep my old accounts open because I can, make arrangements to pay those back, get that paid, so because I want it reported on my account, paid as agreed. But then I can also start a couple new accounts. I can open up a new credit card. I can even secure it with my own money. They call them secured credit cards, right? Where I use my own money to open an account. I might put $300 in it. That's my limit, $300. But what I'm trying to establish is a new credit history, because my old one had challenges. I fell off, right? Things happen in your life. Things will jump off in your life that, you know, is unexpected. And then you start having to use credit to kind of get yourself back on track. I saw that a lot of times during COVID, okay? A lot of people in COVID, a lot of people with businesses that during the COVID, right? Before they start getting a lot of the small business money into the community. A lot of people struggle, you know, to keep the doors open. A lot of people lost their business due to COVID, but a lot of people tried to use credit to stay afloat until they could, you know, until some other options appeared. You know, then they would pay their credit cards off. So I'm just saying, you know, when we talk about length of credit history, that 15% will come in, and it's constant. It's going to come in handy down the road. Keep the accounts open. Do not close them. Just pay them down. Okay. Types of credit in use. the mix that you have. So if I have a good credit mix, I'm talking, I got, maybe I have a Visa, right? Maybe I have an auto loan, okay? Maybe I have a mortgage, okay? Maybe I have an installment loan, okay? Maybe I have, I'm paying utilities, that's in my name, okay? I got a decent mix of a lot going on and I'm paying them all on time, that's 10%, right? To me, the small percentages are the ones that's gonna come in handy. The small percentages are the ones that's gonna keep your score, that's gonna level your score, keep your score where it needs to be. And obviously the big chunk is the payment history. How you paying it back? That's a big piece of it, 35%. These percentages are based on the importance of the 5 categories for the general population, for particular groups. For example, people who have not been using credit long, the relative importance of these categories may be different, right? So we talked about length of time. Next slide, please. Let me know if I'm going too fast. Y'all hit up the chat. Let me know what's in there. Let me know if you got any questions. Now, when I do this presentation live, I call on people. I don't just sit down. I call on people. I start tapping on y'all. So if you got questions, get them into the chat so we can get them answered. Okay, we talked about how the FICO score is calculated. Keep hearing FICO, 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 right? This is how it's calculated. New credit, 10%. We talked about opening several accounts in a short period of time represents greater risk. An inquiry will remain on your report for 2 years. An inquiry, I remember I talked about hard inquiries, soft inquiries. I'll get more into that. I think there's a slide a little bit later in the presentation. Yes.
There are 2 questions.
Yeah.
There are 2 questions in case you want to take them. I don't want to
Okay, go
interrupt
ahead.
you.
Let's get
All
into
right.
it.
One of the questions says, how can you work towards an 800 credit score? Currently, no debt except for a student loan that is current, with excellent payment record, 2 credit cards open, and no balances. Home with balance, payment excellent, no late charges.
Okay, I'm looking at the question. How can you work towards an 800 credit score? Okay, she said no debt except student loans that is current with excellent payment history. Okay, 2 credit cards open and no balances. Home with a balance, payments excellent, no lates. Okay, let me ask you a question. What's your credit score now? Can you put that into the chat? Do you know? Okay, so let me say this. Let's just say if your score is, okay, she said 760. All right, you know what? I got a 760. Let me tell you how you can get to an 800. You need to open up, you probably need to open up, this is what I would do. Now, I'm not gonna tell you what to do, but this is what I would do. If I'm trying to get to an 800 myself, so the line that I'm gonna take is, what you have to do, because just paying everything on time is going to keep you at a 760. It's not going to, because it sounds like everything that you have is in order. Okay, what you need to do to get it to a higher level, you need more room. Okay, in other words, what you need to do is you need to open up another account, because see what's happening is, and then you need to use them cards. If you got cards with no balance, with no balances, you need to start use, pay, use, pay, use, pay. Start doing that. Use the card, pay it off. Use the card, pay it off. Having them with no balances and you're not using them is not getting you anywhere. But what you can also do is, you want to use those cards that you have, but open up another account. Okay, open up another account with a higher credit limit. Request for higher credit limits. When you get a larger or a credit limit that's higher than what you have, what that does is it increases okay, so let me see. It increases your, I'm sorry?
No, go ahead.
Oh, no.
No, I just had a question, but go ahead.
Okay, so what happens is when you increase your credit limit, it's going to give you more capacity. In other words, it's going to give you more room to be able to use that credit. And what happens is you won't be maxing the card out. I mean, anytime you extend credit a little bit further, like say if I'm using my credit, I'm using it. If I get a new account, I open up a new account, that's going to add more points to your credit score. That will help you to get there, but you have to use the cards that you have too. You got to use the cards that you have, and that will help. You said that no debt except for student loans that's current. Okay, I mean, that's fine. But and then what can also help you is you could decrease, and I don't know how much debt you're carrying, but you can decrease your debt ratio. And when I say that, I mean the how much debt that you currently are carrying. So if that student loan, but that's a slow way to kind of add points, especially if you're not paying something off. Just how much total debt that you have to take a look at that as opposed to how much you make. So that debt ratio, if your debt ratio is high, that's going to keep you from, getting a higher credit score as well. So you want to lower that debt ratio. That means the amount of debt that I have relative to the income that I make, right? Okay, so that's kind of like, and we can talk about it offline. Go ahead, Glenn.
So I pay off my credit cards every month. Credit score is great. Is that a negative or a positive?
I'm sorry, say it one more time.
So each month I pay off the full balance of my credit card.
That's
Is
good.
that a negative or positive?
No, that's a positive. You want to do that. If you can pay it all off on time, but continue to use it. Okay.
Okay.
Continue to use it. Even if you only using, if you're not using, you don't have to, please don't max the card out. Unless you absolutely have to, but then, if you're paying it right off, but see, that's going to bring your score down if you're maxing it out. Even if you're paying it off, it's still going to be, too much yo-yoing. What you want to do is you want a constant. But yeah, definitely pay it off, pay the balance off. And see, that's what creditors look at. They want to look and see if you're paying those off completely, So, even if you're only charging gas, if you're using a car for gas, have it where it's manageable, where I can pay the whole balance off, right? And creditors look at that, especially underwriters. Underwriters will look at that when they come time to make a decision whether they want to grant credit or not. They're going to look at that. Okay.
There are a few more questions, David.
Yeah, I see Robin had a question. She said, I was once told to close credit lines, cards that were not being used due to the fact that if all the little cards were being maxed out, it would add up. Look at it like this. Do not close that card out. You want that length of time. You want that history. Just don't use them. You know what? I know somebody that what they do is a friend of mine told me, and I said, hey, if that works for you, what he does is he cut the cards up, but keep the account open. Okay, the little accounts, do not close them, because if you've had them, if I've had my first credit card that you got, if you still got it, and that was like what 20, 30 years ago, man, you want that length of time. You want that length of time that you're using to still be out there. Cut them up. If you don't need to use them, keep the account open and check to make sure the account is not being compromised. I still want to check my credit report, make sure it's not being compromised, but do not close the card. Don't do it. I mean, some people say it, but hey, if I got history on it, I like it. I'd rather have it. I'd rather have that 10, 15%. I think it was 15%. Okay, for length of time. And that's just me. Let's see. Is it possible you can email Power? Yeah, we'll get the PowerPoint out. We'll ask Marie or
yeah. Hey, David, we're kind of running out of time here. Just
How we
to give you a
doing
heads
on
up.
time? Okay.
We're running out. Yep.
All right. So let me just kind of speed up. Let's go to the next slide, please. Okay, we talked about length of time, 15%. I just talked about that. Your scores take into account how long your credit has been established, including the age of the oldest. This is to the point that I was just making. Okay, how long your credit accounts have been established, including the age of the oldest account, the age of the newest account, and an average of all your accounts. So do not close the account out. Don't do it. How long specific credit accounts have been established? Same thing. This is pointing exactly to what I'm talking about when we talk about history. And how long it's been since you used certain accounts. Okay, it's all taken into consideration. Next slide. And we talked about, how much you owe, having accounts, and owing, having accounts, payment history, 35%. We talked about that. Next slide. Request your credit score. Okay, contact these 3 agencies: Equifax, Experian, TransUnion. You should see your credit report on all 3 agencies. They may, and you're gonna see the same information. It's just how they score is a little bit different. I would put it like this: Experian is the most critical, but that's the middle score. That's the one that they usually base the decision on what that score is. Equifax and TransUnion is usually a lot higher. Next slide. Check it, check. Remember I said check that credit report. Here's some of the numbers and websites for all three. Take a quick camera phone shot of this and until you get the presentation. If you don't know, you want to check it. And like I said, they may have a small fee, but it's like $7-8 or something like that, where they send you alerts. Get that alert anytime something is happening, because you want to know when it's been compromised. As soon as you see something that hasn't been on, that's on your credit report that hasn't been on there that you didn't do, you want to report that. Go ahead, next slide. Yep, Fair Credit Reporting Act, and requires the agencies to give you a free copy once every 12 months. That's changed. And here's some numbers for annual free credit report and website and that kind of thing. Get a quick camera shot of that. Next slide. Tips on building good credit. Okay, apply for a small loan at a bank, through for a credit union. I got accounts at several different banks, even though I'm a member. I work for Level 1 Bank. I also have a credit union account. Credit unions offer different credit products, right? And I've worked in both the credit union world and the banking world, so I'm always going to be a part of both, and they both have great benefits. Make large down payment purchases if you can. Buy a car. Be interested in buying a house. Make that a goal. I think everybody deserves to be a homeowner. Okay. Open a cash secure credit card. I talked about that, where you're using your own cash to secure the card. Avoid too many hard inquiries. A hard inquiry is when I open a new account. A soft inquiry is when they send you an offer in the mail and saying that you could be pre-approved and this and that. They've done a soft inquiry on you. And if you in some instances, like at the credit union, they'll give you they'll increase your they can increase your limit without actually doing a hard inquiry. Some can do that. So you just got to check to make sure. Hard inquiries stay with you 2 years, and they bring your score down. Too many hard inquiries, because what that says is I'm jumping around, I'm looking for credit everywhere. Okay, if I have too many hard inquiries. Okay, that's the road to good credit. Next slide. Okay, pay the bills on time. You got to do it. Keep debt levels low. We talked about that with that debt ratio. Make sure that you make regular payments. Have your payments regular. Have the lender review rent and utility payments. I talked about that. You can have that reported. You can have that listed if you're making good rent payments. Make regular deposits to a savings account. Always save. Always save. Even if it's not but a little bit. Do it. Okay, next slide. I know we're running out of time. I'm gonna try to get through this. How to repair your credit. One option is get a copy of the credit report. Report errors to the credit bureau agency. If you see errors in writing, that's what I say. You got to pull that credit report. You got to look at it. You got to look at it. You got to find out, was this something I did, or was this something somebody else did? Did I pay this off? Was it reported as being paid in full? As it paid, it would say paid as agreed. Because if you're paying off accounts and it's not reported that way, and they're not going, hey, look, an agency or I put it this way. So a credit card company, I can't rely on them to 100% to make sure that they're reporting that I paid off auto loan or I paid off an account. You got to make sure that they're doing it and that it's being reported to the bureau. So that's your responsibility. I always put the onus on us and not the onus on them. Because if you're waiting on them, sometimes they may take 3, 6, 12 months. You never know. They may forget about you altogether. That's not important to them. You're no longer a customer of theirs, right? I'm just saying that's not a priority to them. By law, they're supposed to do it, but a lot of times they fall off. They got people in there that work just like a regular person. We make mistakes, right? But that mistake could cost you in the long run. Okay. So contact lenders, renegotiate payment plans. If you haven't, you need to make a payment plan, contact them, call them. Don't look at the phone and say, hey, I see them calling me and I'm not doing anything, right? Call them back. Make the arrangement. It's like I said, some money is better than no money. Next slide. All right. Also, you can find reputable credit counseling agencies. I tell you one that's good. GreenPath is good. That'll help you to get back on track, right? I use GreenPath. They're good. They're a great organization. Advise you on managing your money, debts, help you develop a budget, create a personalized plan, help you solve money problems. Next slide. Be careful committing to a credit agency. If they're trying to charge you a fee, and you know what, I want to tell you about this. So they'll try to take your money. Some agencies will take say if I'm using $100 to pay down debt, they'll take $80 of that 100 and only apply $20 towards your debt. That's the reason why I say GreenPath is a lot better than that, because I've had experience with them. Next slide. Okay, scams are out there. Okay, be careful of them. They be out there. They promise to erase bad credit fast and easy. You know, help you create a new identity. I don't need a new identity. I am who I am. They want you to pay before providing a service. Stay away from that. Don't ever pay for money I shouldn't have to pay money to reduce my my credit. You know, anytime you have that, it's a scam. Don't even. It's nothing in it for you. That's good. Okay. Next slide. If it's too good to be true, chances are it's not. Consider steps that enable you to make your payments. Consider paying your bills, using funds from your checking. Avoid withdrawing money from retirement savings. You know, stay current on loans, credit cards, and other bills. Pay it in full. Next slide. Problems with payments, contact your lenders immediately if you anticipate payment issues. You can damage your credit rating if you're not proactive. If you just sit around and do nothing, you can damage your credit. Your lender will help to discuss different solutions and let you know what your options are out there. You got options. I talked about that. Next slide. Homework. This is what I need everybody to do. Obtain copies of your free credit report, okay? Make sure the information is accurate. If you find errors, contact the credit reporting agency that's reporting it and tell them this is not correct, okay? And then, because what they can do, you dispute it, and they have a certain amount of time to make a decision on the dispute. So either they got to remove it, or they got to let you know what happened. You know what the responsibility level is. Write it down and stick to it. That's your homework. Okay. Next slide. Okay, this is the end of the presentation. Before we close it out, I want to talk about the GreenPath piece one time. And this is it's super easy to do if you have a credit union account. With GreenPath, what happens is, and I know they charge a fee. Okay, and I know I said stay away from agencies that charge fees that help you repair credit. But this is what happens if you have a credit union account. If you have a credit union account, at the credit union, they have a program called the Excel program. It's EXC, I believe, ELL, Excel, I think. And that program they have a partnership with GreenPath. If you have a credit union account, you're able to use the Excel program. The Excel program will pay the fee to GreenPath. So in other words, I give GreenPath $100 just for me having a credit union account. They're going to pay the fees to GreenPath. My whole 100 goes towards the debt I'm trying to repay. Right? Every dime. Because my fees are being paid by the credit union and being a Excel program to GreenPath. So, that's a way to mitigate the fees and how to get your credit repair, get back on track. And they have what's called debt repayment plans, where I can put several different pieces of debt into a plan and then make one payment, and then they will spread that payment out to those pieces of debt, and they just manage it for you. It's a great way to get back on track. Help me get back on track. Okay. Let's see if there's anything in the chat. Let's see. Q&A, what we have here? Could you put the HW slide back up? What slide was that? HW? The homework slide. She wants to see the homework slide. There you go. Got it. Okay, anything else? Let's see. Answered, we got dismissed. Okay, we seem to be good in the chat. Anybody got any other questions?
There seems to be a question about credit limit. When someone offers a higher credit limit, should they take it?
Okay, is that an answer? Let's see. So what was the question again?
Says, I have done this with cards before, use and pay. I have a 9,000 credit limit. They want
Uh,
me to apply for a higher credit limit.
You know, and yeah, you can. You can, if you paying on time, you got 9,000. See if they extend it to 15. You know, because see what happens is it's giving you more room, which will allow you. Believe me, if you're expanding it, but see, you have to use. I don't say you have to run up $9,000 worth of credit, but you having more room will definitely add a few points. That's one way of doing it. You know, but I think a great way to probably try and add points is to reduce whatever debt that you have out there. So you got to look at, you know, how much you owe and find ways that you can, maybe help to mitigate some of that. So I just put it, see, and I don't know your situation. I have to look at the credit report to actually know where, you know, you can make some changes. So it's kind of hard to say. I'm trying to advise blind, and that's kind of hard to do. But you know, what you have to do is take a look at your debt and maybe increase the limit on one or two of those cards. You know, that don't mean you have to use it up, but it just gives you more capacity, right? Anybody else?
There's a question,
that's
how
it.
often, oh, go ahead, Glenn. Go ahead.
Let's look at it.
Go ahead, Marie.
How often can you request your credit report?
You know, and I do it like this. See, there's some like with annual, I think with annualcreditreport.com, they may be only like once or twice, but you can, you know what, if you go with Credit Karma, like I said, Credit Karma will be a few points north of what your credit score really is. But what the benefit of what Credit Karma does is it gives you up to date on the activity that's going on the accounts, on any of your accounts, how your score changes. That's what I really want to know. I really want to know what's affecting my credit. When I know I hit more than 30% of my limit, what's going to happen? Because see, I put it like this. If I got $1,000 limit and I go over 300 of it, I start going over into $400, $500 of that limit, I use half, that's going to bring my score down. Anytime that happens, and you know, I'm not always keeping track, you know, like, you know, especially if you use your card a lot, you're not always keeping, you know, 100% track. They'll help you to stay on track. They'll let you know anytime that score is affected, up or down. And I love that because then I can point to it and they'll point to it. So Credit Karma will point to it. Experian will really point to it. Experian has like a small fee. It might be like $7, $8, maybe $15 now. I don't know. It's been a while since I've had it, but you have it for years. And they'll send you alerts and it's spot on every day. Well, not necessarily every day, but you can check it anytime you want. See, that's what I like. I like, you know, being able to have them, you know, so you're going to get an alert on your phone. Anytime your score goes up, down, you're going to see that alert. It's going to bloop, it'll happen. And you can look, and then it'll tell you, you can go into that app and look and see exactly what it was that affected it. You know, and that's what you want to know. Once you start getting more of an intimate relationship with your credit score, you'll know how to manage it better. Because I'll be like, oh, you know what? I'm getting close. At least on that card, that particular card. If you met almost like over 30% on one card, you know, I need to pay that down before I can really use it, or I can use another card. You know, I just use another card.
Hey, David, last question.
Go ahead.
Any suggestions for dealing with stolen identity?
Yes, stolen identity. And it happens all the time, man. It happens more than I care to share. You know, stolen identity, what you want to do, and see, that how you spot that is by what we just got through talking about, is by having an alert anytime something on your credit report jumps off, right? And by checking it. But what you want to do is, if you see something and you know it's not you want to dispute it. You want to do what's called a credit dispute. So I would go to, I would look at it on my credit report. First, I would find out who's reporting it to, you know, that bureau. And normally they have a number or, you know, some kind of contact like number of the agency that, or the institution that's reporting where the fraud took place at. And then you call them and you let them know, hey, you know, this amount that's on my credit report is not me. You know, I want to dispute it. So you dispute it. And then, like I said, whether it's Equifax, TransUnion, or Experian, whoever you disputed with, they got 30 days to make a decision on what to do, right? Normally, they really trying to act fast on it because they want to first, I'm gonna put it like this. So the first thing you want to do is freeze that card. Stop them from using it again. If you know it's a card that's been compromised and your identity has been compromised, hey, freeze the card, let them know, hey, look, it's been fraud, report it that way. But then the part that the back end is where you're gonna have to work. You got to report it if it's been reported to the bureau, right? If you catch it in time, you can have a card shut down, and then you can, your relationship dealing with the bank, but you don't want it to be a dispute where, a charge that has now been delinquent, now it's been reported, now it's hurting your credit, your credit score. So if that happens, then, you got to dispute it with the bureau, right? So there's two different things that you have to do. You first stop the card from being used. You want to freeze it. You want to let them know there's been fraud on the account, do a fraud alert with the card company. Then, if you didn't catch it in time and it's been over 30 days, now it's been reported as a 30-day delinquency or longer than that, God forbid, you want to go to the bureau and find it on your credit report, and then, just let them know, hey, look, this is fraud. This is not me. I want to dispute this claim or this charge. And then they'll start the process like that. But it can be very lengthy. It depends, depends on how long it's been on there and how deep it's been compromised. Yep. Next question, or any other questions?
I think that's all that we have.
Wow, that's been awesome. Well, thanks, MRS, for making this all possible. Thanks, Marie. I appreciate, everybody that was a part, Tyler, a part of making this presentation happen. I hope you ladies and gentlemen were able to grab something from this presentation that you can use later on. And I look forward to the next one.
Thank you so much.
Thank you, everyone.
Appreciate you.
Thank you.
Thank you, everyone, for attending.
Perfect. Have a great afternoon.
Yeah.
Great weekend.
You too.
You too.
Thanks, David.
Hey, Taylor, can you make sure that I get a copy of this slide too?
Yeah, can do. I plan on sending a copy of the recording and slide deck to everyone involved, attendees and panelists. So that'll be coming your way as soon as I have the recording done.
Awesome. Thank you so much.
You're welcome.
All right, guys. See you later.